All right, I would like to call the Human Resources Committee meeting of December 10th to order. It's a fairly short agenda. First is the staffing action items. Mr. Swartz, anything to identify here?
Yeah, actually nothing out of the ordinary. We do have a couple of retirements that will be coming up at semester time for some of our elementary teachers, but other than that, that's about it.
No more or less action than usual?
Yeah.
Okay. All right, any questions? No? All right, next then, get down here, is the first reading of our nepotism policy, long awaited.
This was modeled after the charter school policy, where you can see where we struck out charter school. It's an MSBA policy, and then there are some additions in there that we've added. But for the most part, it's a starting. I think it's actually probably not too bad of a policy because it gives you some room to interpret some of the situations you might come up against in this situation, and additionally with the definitions.
Yeah, I read over this. I thought the definitions were pretty inclusive.
Yeah.
And did not see...
I'll give Amy credit for working on this. And that's assuming you like it.
This is the first reading, so other board members will have a chance to look at it and discuss anything. Any questions? I can't remember member Lofald had a question about, I think it was people who came that we hired.
It does have a piece in here about looking at where your existing situations are right now. I think this might be that number 6. Is that correct there?
Existing conflicts, right?
Yeah, that would be for existing people that could be impacted by. And for the most part, where we're at right now, we do have layers of supervision in between.
I think that was the main point of contention, that there couldn't be any direct supervision of one family member to another, since we do have family members in the district. All right.
And then, like I say, number 5 on here does have the provision for exceptions and special circumstances. So.
That would eventually come to the board to make a decision. Okay.
Yeah, I think for the most part, the superintendent would be the referee on this, and if it was a situation involving the superintendent, then it would come to the board.
Superintendent?
Yeah, I wanted to note, your comments about the supervision, but there was another area here that spoke to anyone who. Okay, here we go. It's in the very first part. Individual who may be perceived to have unfair influence over the career development, work assignments, work direction. So if you're talking about the daily work of someone, I know it's one thing to supervise someone as an evaluation, but there's also the piece where you're technically supervising them because you're directing their work and you are asking them to complete tasks. Is that our intent here? Because we would have situations like that. I'm not saying that we couldn't address them. I think it's probably in our best interest to address them. but there may be more than we can think of off the top of our head as well.
Are you in Roman numeral 2, number A, or letter A?
I'm in 1.
Okay.
To prevent situations
sure.
where an individual, yeah.
Right, yep. And again, I think, not that I think it would cover everything 100%, then you kind of would move over to some of these special circumstances. And I do like the wording in this one here too, where they may have or be perceived to, which are, in a way, two different things.
I think the problem is there are formal organizations, but within them there are informal organizations. And that's where this may come up. And I don't know how you can define an informal organization within a structured organization.
I see it as within departments as well. If we had the finance department where they're all in one space, and there's one person kind of in charge of that department, just like Mr. Swirsky is in the HR department, oversees that department. Just as an example, if a family member of Mr. Swirsky worked in finance, he really doesn't have supervision or direct the work of anyone there. But in the HR department, he does oversee them, he does direct their work, and so I would see that as a conflict. Just for the record, Mr. Swirsky does not have any family members working within finance or HR. That I know of.
All right. Well, that can be noted. I think that we'll be discussing this again. So if there are no other questions or comments, we'll move on to informational items, superintendent search update. I know we have a meeting on next Monday, the 16th, with the school board with the search firm we've hired. And that's all I know at this point. You have any?
Yeah, I believe that meeting's at 5 o'clock.
5 o'clock? Yep. Okay. Anything else? All right. Nothing else? No future items at this time? Nepotism is now on the agenda, so it's not a future item. All right, then I will adjourn this meeting. Thank you.
Maybe both of us, if I'm not healed by then. We'll make quite the representation. All right, we will go ahead and open the business committee meeting for Tuesday, December 10th. And we're going to start with a guest presentation from Whitfley on our final audit for the financial report for year ending June 30th. So thank you to Whitfley for being here with us. We look forward to the presentation. Just a point of order, would you like us to hold questions until the end of the presentation, or do you want us to ask them throughout?
You can ask them throughout, that's fine.
Okay, great. Yeah. Thank you. I'll turn it over to you. And thank you for bringing these slides.
So I'm Michelle Swoboda. I'm from Whipfly. I am the new partner on the audit as of this year. So this is my first year auditing Duluth schools. So I just want to go over the PowerPoint, and like I said, interrupt me if you have questions. So first slide is just talking about our responsibility when we actually do your audit. Our responsibility is to issue an opinion on the basic financial statements, report on compliance and internal controls over your financial reporting, report on compliance and internal controls over your federal funds that we test, which is required when you spend over $750,000 in federal dollars. We have to do what's called a single audit, so that's an opinion under uniform guidance. And then we also report on compliance with the Minnesota statutes that we test. Next page is where we actually give our results, and we have great results for you. We had an unmodified opinion on the basic financial statements, which is a clean opinion. We had no internal control findings over financial reporting and no non-compliance over the federal programs that we tested. We tested Head Start, actually just one program this year, and no non-compliance with Minnesota statutes that we tested.
Just a quick question. Is it standard to only test one program?
It depends on, there's specific rules we have to follow. Because you're considered a low-risk auditee, we only have to test 20% of your federal expenditures. Major programs are going to be any program over $750,000 in federal expenditures. So those, we do a risk assessment. All of your programs happen to be low risk. But you have to test them every 3 years or they become high risk. So essentially, your programs under 750 very rarely would get tested unless they were high risk. Over 750, we're going to test them at least every third year.
Okay,
so Head Start hadn't been tested for 3 years.
Great, so there's a cycle. And,
yes.
Okay, perfect, thank you.
And sometimes it's more than one, depending on the cycle. Next page is the general fund, the results of operations. And you'll notice there's two items that I talked to Peggy and Kathy and pulled out of the revenue and expenditures. When you compare them to the actual financial statements, you'll see that TRA and payroll special funding revenue. This is an in and out that the state requires you guys to record in accordance with GASB. And it's a non-cash revenue, non-cash expense. So that $3,515,501, just so you know, we pulled that out because what your revenue and expense budgets are actually based on does not include that number. So your revenues, you'll notice at the top, you were over budget, $1,146,000. Part of that was just higher enrollment, plus you did have some additional special education funding, I believe, related to financial year 18 that came in 19. Then your expenditures, halfway down the page, those were actually under budget by $1,527,000. So your total net, actually, it says deficiency of revenue over expenses. It's actually excess of revenue over expenses. In the final column, right in the middle of the page, $2,307,000. And then you had some money from other financing sources of $685,000. So your net change in fund balance, so your net income in the general fund, was $2,992,176 for the year. Next page is your general fund balances. You'll notice you have quite a bit of your fund balance in the general fund that is restricted, and we list those out, what they're restricted for. And then you'll notice a change in 2019. You have some assigned fund balances. So towards the bottom, you have assigned for textbooks, equipment, and student activities. And this is a total of $1,947,000. And your unassigned fund balance, the very bottom number at the end of the year, was $688,512. And assigned essentially is money that's not restricted by an outside donor or outside source, and it hasn't been committed under formal action. Next page, your general fund unassigned fund balance just over time. It has gone down, but now it looks like it's on its way back up. And that number, if you hadn't assigned those funds, would have been significantly larger at the end of 19. The next slide is the general fund unrestricted fund balance as a percent of expenditures. Sorry, I apologize, it says 2018. That should say 2019. But the $2,636,005 includes the assigned amount. So it's the unassigned and the assigned, which would be considered unrestricted funds, because you can reverse an unassigned fund balance. So it's total expenditures are 2% of your fund balance, or your fund balance is 2% of your total expenditures. Next page is your food service fund. You'll notice that your revenues were over budget by $233,000. Most of that was in sales to pupils. That was about a $188,000 increase over budget. And then your expenditures fairly close, but they were actually, and it's showing the wrong sign, but it's actually under budget of $83,439. So your total income in the food service fund was right in the middle of the page, $176,737. So you had a little bit of net income in that fund. You'll see at the bottom for fund balance, most of your fund balance in food service obviously is going to be restricted. Your community service fund on the next page. That your revenue was over budget, $551,000. Most of it came in fees, increased participation in Key Zone, school readiness. That was about $216,000. And then you did have additional Head Start money of about $318,000 more than budgeted. So that's where most of that increase came from. And then your expenditures were under budget by $218,730. For a total net change in fund balance of $45,093 in your community service fund. Your capital projects fund, you didn't have any revenue budgeted, but your expenditures were actually under budget, $152,019, and I believe that some of that work was pushed into financial year 20. So those dollars are going to be carried over and spent in 20. So a total loss in that fund of $478,655. Your debt service fund. Your revenue actually was under budget, $2,191,000. I believe this, correct me if I'm wrong, Peggy, the budget didn't include the tax credits that would have been netted against
correct
the revenue, the levy. So the budget included the total levy without the tax credits that would have been netted against there, which are included in the actual netted against the revenue. Okay, it's in the budget, it's your total levy, whereas The final number would have been the total levy less any tax credits that were netted against those dollars. And then your expenditure is fairly close, $537,000 under budget. And then you did have some other financing that you did. Actually, I should point out really quick before we get to that, you did have a deficiency of revenue over expenditures of $1,499,000 in the debt service fund. And then you did do some bond refunding, which most of that was not budgeted. So that's what that change is. So a net change in fund balance in that fund of a loss of $81,829,000. Biggest piece of that is one of your larger debt amounts was refunded, I believe about $71 million, and from escrow amounts. It wasn't refinanced into a new bond. It was just paid.
Can you break down for us, please, that $81 million in a way that, like, if someone were to ask us, why is it that we're looking at your debt service fund from your audit and seeing this almost $82 million net change in the fund balance? Can you just break that down for us a little bit? I don't know if CFO Erickson you want to weigh in too, but can you help us understand that a little bit better, please?
Yeah. The first piece of it is really just the regular revenue and expense, which you had a $1,499,000 deficit. The rest of it comes from the bonds. So it's everything that happened with the bonds netted out to a negative $80,330,000. So what happened is you issued bonds of $44 million, which the next line down, the principal refunding payments of $125,000. So part of those principal payments went into new bonds, which is the $44 million. So kind of not exactly trade out, but trade out of the $125 million that was refunded with the new debt of $44 million. But then in the $125 million, there was also one bond that was refunded, which was $71 million, I think a little bit over that was not refunded. So it didn't become new debt. So you actually just paid that off.
Okay.
And that's where the biggest piece of that $81 million loss is going to come from, is that money that wasn't turned around and put into a new bond. It was just refunded.
And for a little more detail on that, the original refunding occurred in 2016, and that money, it was an advance refunding. The money sat in escrow until the call date of February 2019. So you can see from last year's fund balance, we had over $80 million sitting there, and that was a lot of that money was in escrow. So then when the call date came in February of 2019, that money was paid out. That old bond was paid off.
That's $71 million.
Yeah.
Okay.
Yes, thank you.
Member Osborne.
The line item about the premium on the bonds is the $5,239,000 figure. Is that just the cost of refinancing the bonds or redoing the bonds, or what would that? Is that line typically there, and is it typically that much? I guess is what I'm asking.
I don't believe that includes the cost that you paid. I believe that's only the premium. You either will pay a premium on it, or you'll have a discount on it, depending on the dollar amount that gets refinanced.
Right. So what it is, we issue bonds for a certain par value, but then when it goes to the open market, some people will pay more than the par value for the bonds, and that difference is your premium, that people have paid you extra money to get those bonds.
Okay.
Any more questions on debt service? And then the next...
Can I ask one quick question?
Oh, yeah. Yep.
I don't know if you can answer this question or if this is appropriate, but how does our debt services fund compare to what you see in other districts for which you do audits?
I think the ending fund balance is probably fairly similar. Usually the fund doesn't have a lot of money in it, a lot of fund balance in it. The 84 million would have been kind of a one-off because you had money sitting there that you had it in escrow. So I would say usually there's not a huge fund balance in that fund.
Right.
Because there usually isn't money just sitting around.
Of course. Yeah. CFO Erickson.
Just looking at districts similar in size to us, we do have several districts who have similar debt service yearly revenues and expenditures similar to ours. A lot of it is just timing on when districts are building new buildings and running new referendums, and you've probably seen this last November there were several larger districts who passed referendums, so they're adding new debt. And so when we did a comparison during the operating referendum last year, we looked at debt service as well as operating referendums to see where other districts were. And I think that the yearly amount of around $20 million of what we pay for debt service is similar to larger districts. And then just regionally looking at debt service, there are several districts, of course, in relation to their enrollment, have less annual debt service, but in comparison to how many students they have and how much debt they have is pretty similar. So just because we have more students and more buildings, the amount of debt service we sold back when they did the long-range facilities plan in correlation to what we're seeing now is very similar.
Okay.
Does that help?
Yep.
Okay.
Thanks to you both.
And then the next slide actually just lists out the outstanding debt. So you can see, and I was off, I said 71 million, but it was actually 77,165,000. So you'll notice down in the certificates of participation in the refunded column, those were the bonds that were refunded. In the column new debt, that was the new debt taken on during the year. And then the 11,265,000, actually I'm just looking at certificates of participation, but in total, principal paid on the debt was 15,675,000.
Where do we find that number in
The
here?
principal paid, when you don't take into consideration new debt or refunded, the very bottom of the page, second from the right,
got it.
15,675,000 was
you.
what you actually paid in principal. Any questions on the presentation?
If we have questions between now and Tuesday, do we direct those to you, Kathy? Okay, thank you. Any other questions? Great.
Okay,
Thank you so much for being here.
Thank you. Thanks, Michelle. Thanks, Peggy.
All right, we will move on to the financial report. We talked about the audit. Any questions on the preliminary financial statements from October? Okay. Any questions on the budget revisions or comments? Okay. Any questions on wire transfers or investment transactions? Those were pretty straightforward. How about on the APU projections? I saw a nice increase in some of those numbers. So do you have anything you want to say about that, CFO Erickson?
Thank you. Looking at the APU report, that does show the red column in the middle plus the adjusted where we do the expected attrition. Just wanted to make a note that we did increase the expected attrition just a little bit compared to last month when we were looking at the activity that happens towards the end of a first semester and going into the second semester, and then those anticipated changes towards the end of the year. That's where we see excused absences and students who have enough credits to graduate. So we see more volatility, so we did a little bit of a review. So again, we're seeing ourselves in that adjusted column, very similar to where we were ending up here now in fiscal year 19 as we're getting ready to see final enrollment counts for fiscal year 19. We're not quite there, but we should be seeing the final pupil unit reports for fiscal year 19 clearing up now, which would be at the 822947. So we are currently projecting a very stable enrollment again, and that includes attrition. If you were to look up at the very first set of numbers, it might look like we're growing, and that's kind of the enrollment right now. So we want to temper that with the expected attrition so that we're not having that expectation that we're going to necessarily see growth. And that does trigger us to have the conversation that we'll be having in January. Our budgeted ADM, if you recall, was pretty conservative. We were at 8116. That was the next column over. And we'll be recommending an increase for that for next month. So we'll be adjusting our revenue projections based on feeling now that we're halfway through the year and still seeing that stability in pupil counts. We're not going to go crazy and go all the way up, but we're going to meet it probably about halfway, and then ask the board to consider us doing an amended budget on the revenue side to account for that additional enrollment. So Kateri has been fantastic to work with. She's been doing a lot of analytical work for us to make us feel pretty comfortable with making that recommendation. I'm always very hesitant to go higher because we know the volatility that can happen, especially with options and other opportunities, and especially in the secondary level, and then having the elementary options we have in the district as well. So we do feel very good about the numbers, and I think we're going to continue to see that stability throughout the fiscal year, including that attrition that we're accounting for.
That's great. I know it's a ways away to think about this, but where do you start using numbers to budget for staffing for the following year?
It's a great question. We're actually having those conversations right now. We are actually having those conversations. Part of the halfway point of the year, which is kind of where we are, is analyzing where we are right now. What do our staffing and enrollment counts look like now? Even though we budgeted a lower ADM, the FTE staffing we did was on a higher ADM. So we didn't correlate the budgeted revenue to how many students were actually coming into the district. And if you remember, during the budgeting process, we said to all of our buildings, if you have the FTE you have right now and we rolled that into next year, could you make it? So we actually, our goal was to maintain stable FTE from last year to this year, and our enrollment is proving that because we're at a very stable enrollment right now as well. So we feel like from a budgeting standpoint, once we have that discussion, is as we think about fiscal year 21 and seeing this is the kind of process that you go through as your 12th graders graduate and you bring in another level of kindergartners and you shift people, will those continue to look stable? And then we would be measuring that FTE on that same level. So, our conversation will probably start out with, if you have what you have right now, because we're, again, going to project maybe some stable enrollment going into fiscal year 21, we would probably continue that same staffing grid. Not to say that there aren't going to be opportunities to look at individual buildings and individual situations. The boundary study is going to play a part in that discussion because, and it certainly would defer to the superintendent to have those discussions, but, how we're going to budget the buildings will depend on where the enrollments end up. So if those adjust because there's going to be potential changes in where our boundaries are and where our students enroll, we would have to be looking at adjusted FTE as well. Does that help?
That's very helpful. Yes, thank you. The other question that I have, and this is in preparation for our discussion next month about potentially changing the budget to go a little bit higher based on where we are now with ADMs. Is there value from a financial standpoint in staying where we are now with our budgeted numbers in an attempt to try to increase what we have in reserves and or pay down additional debt services?
That is a very thoughtful consideration. And I think it's one that Peggy and I have had that discussion, I don't know, a half a dozen times so far in the last, every time we get together, we have that discussion. And I think acknowledging where the pupil units are is critical, but then what you do and what tools you use for your budget, if that's the direction that the board would like to go in, we can increase the revenue, but that means we can just do a set aside if we don't want to allocate that revenue for something else. Part of what we need to do before the January meeting is kind of do that halfway checkpoint to see where our budgets are. Are we on track? Were there places or any place in the budget where we might be seeing expenditures where the budgets might be a little bit low, so that part of that revenue will help adjust for those portions? Or, are we in a place where we would want to set that aside so that if we have other unexpected costs? As you may know, special education is an area where we have been working since the very beginning of the school year and have done investments there. And as complicated as special education revenue is, we are again at the cap in terms of what we're going to get for special education revenue. So when we have expenditures in this year for additional special education costs, that's coming out of our general fund because we aren't getting new money in this fiscal year. The expenditures we have right now are going to get reimbursed a year from now, but they don't fall in the same fiscal year. That's what makes special education so complicated. And so we have already invested this year into special education. So our budget has already adjusted because when we get a student, we have a situation that requires additional supports, we have to provide those. And so we have been doing a lot of that groundwork already. So I agree wholeheartedly that moving one side of the budget doesn't necessarily mean we have to react with an equal or same change of expenditure, and that may be just sitting out there in preparation for any other unexpected or planned expenditures that the board or as recommendations that come through finance might see.
Thank you. That was a very thoughtful answer. Member Oswald. Sorry, I'm used to sitting across from you, so I'm having to move my head. Sorry, go ahead.
That's all right. I was just going to ask about the adjusted significant dip in 12th grade numbers. I don't know if you addressed that with your comment of early graduations and that kind of stuff, but can you tell me why it's lowered so much by over 87 or 86 people?
And that's under the attrition? Is that the one you're looking at towards the bottom where it's from 647?
In the second grouping,
the 647 to
the 647 to the 561.
Yep. And that is due to the early graduations, just higher student enrollment at the beginning of the year, and then we see and options as well, post-secondary. Some students might be having the early excused absences, so then we don't get that full amount of ADM. So the amount of students we have in that grade level, and these are just, and again, this was an estimate that 48.64 may get trickled up into the different grade levels, and it may end up being 40 or 42. But that's kind of the number we've been seeing over the last several years from the beginning of the year to the end of the year, what we see in attrition for 12th grade. And
is there a way to identify really what it is? Because I'm nervous that this may be more dropouts or people being shifted to other school districts for other needs and that kind of stuff. So I'm just curious why this is, it's just 12th grade that at the end of the journey. So
and I think that's a great question, and I think that's something we can probably delve into a little bit. I'm certain that we can use Mars information and then just use high school counselor information and enrollment information at the buildings to get that more information for you. Sure, we're happy to do that.
Superintendent Granza.
Thank you. That is an area that we've delved into as well, and it would be a missed opportunity for me to not bring up 0 hour again. 0 hour is a great benefit to a lot of students, provides opportunities above and beyond. However, it does allow students to earn credits early, and so when they get to their senior year, if they've already earned their credits, they don't have a requirement to have 6 periods because they could graduate on time and take 4 periods, and so then they'd have 2 open periods in their schedule. What that results in is a lower number for a senior year. So there may be the same or close to the same number of students in the seats, but they're not there for the whole day, or they're going to college for half the day, or they're just working or doing something else for part of the day. And so the 0 hour has a huge effect on that senior year. I'll also say that when students take a 7th period, we don't get any reimbursement for that 7th period when they're taking it, and then they're leaving early, so we're getting less when they're juniors or seniors. And so it's really cutting our revenues. It's creating unreimbursable expense in the beginning and then cutting our revenues at the end, so it's like a double whammy.
Member Oswald for a follow-up, and then Member Leflerkamp.
I have a hard time saying 0 hour has that big of an impact, because I know we have way more PSEO students that have been taking 0 hour, and when you take a semester of PSEO, I know at Lake Superior College, you end up earning a lot more credits than is required for if you were in a seat-based program in our schools as a full credit course load. Like if you take a semester's worth of English at Lake Superior College, it's actually a credit and a half instead of just a credit. So I believe that that's much more of a detriment to our budget, but it's great for our students.
Yeah. I did just want to make one comment that looking at the second set of enrollment numbers, looking at 18-19 versus 19-20, we want to look at last year's 11th grade, which was a smaller class that's rolling up into this year's 12th grade. So we don't want to compare the 647 to the 561. We want to compare the 609 to the 561. So so people don't think we're actually losing all those kids. They're actually progressing from last year to this year.
Thank you for that clarification. Have we seen an increase in PSEO students? Has there been a significant increase?
Kateri hasn't mentioned it, so I'm going to say that I haven't been notified that there's been anything alarming or materially changing compared to last year. And I know that this is about the time of year that she's doing that analysis, so we should probably have more information at our January meeting.
Okay, great. I'd be interested in that, just from kind of a poll that isn't an official poll. Yeah.
Great, thank you. And I'm sorry that I didn't mention this earlier, but a huge thanks to the finance staff for all your work on the audit. I know how much work goes into audits. I can't imagine for one of this size. So thank you very much for all the time and effort that you put into that, and then for your willingness to answer our questions. I'm sure you'll be getting more from fellow board members before Tuesday. And are you planning on presenting that information on Tuesday, or do I have to try to do a summary? I'd be happy to give it a whirl.
I would be happy to give a summary, but if you'd like to give a summary, or we could connect and do that so that we could just have an overview that you could report.
That sounds great.
Yeah,
okay,
great.
Perfect. All right, moving on to fundraisers. We had some good fundraisers. Any questions there? Okay. Finance education. Truth and taxation, which we'll be covering ahead of the board meeting next week. And so I will turn it over to you, CFO Anderson.
Thank you. Trying to contain my enthusiasm for one of my favorite times of the year. And what I wanted to do with our little opportunity to have our finance education was to just talk a little bit about the levy process, what a property taxpayer might be seeing on their proposed property tax statement, and what that means to the district as far as when the revenues come. And so our levy, which was approved as a proposed in September, the board is now going to be doing a final in December. and it hasn't changed. So, and I do have a little preview slide in here to show that if, as a reminder, our levy is only changing a little less than $253,000, which is a 0.63% increase. So really a very small change in the levy compared to last year. So we have a very stable levy. There are many things inside of the levy that have changed, and we will be talking about that during Truth in Taxation, so I don't want to spend a lot of time tonight talking about that, but I'll try to give a summary and then provide a summary to all the board members as well to kind of go through those different pieces. So thinking about that, we have a stable levy. How do we then take that levy that we're requesting of the taxpayers and have that spread? We share this information with our county auditor, and then they are responsible for then to spread it on our property owners. They collect the taxes on our behalf and then send those proceeds to us so that we can use that for our budget. And there are two potential tax bases that any district can levy from, and that would be the net tax capacity tax and the referendum market value tax. And the statute determines which taxable market value we utilize, so we don't have a choice. So the state tells us, depending on the things that we're eligible to levy for, that we're required to levy for, that we choose to levy for, or the voters opt for us to collect, that determines which taxing pool we do levy those on. So for a net tax capacity levy, we would take the taxable market value. So if you think of your proposed property tax statement, there's going to be up in the top right-hand corner, you're going to have those valuations at the top. You're going to have an assessed value, and then you're going to have a taxable market value. So there's actually going to be two different amounts on your property tax statement that you want to be visualizing. The top one, which is your assessed value, is what you hope you can sell your property for. And last night in my city council world, we had our Lake County assessor come and talk about that the requirement of the assessor is to try to make the valuation of your property what you can sell it for. Obviously, if you're a property owner, you hope you can sell your property for more than what it's assessed at. That's our hope as property owners, but that is their job, is to look at sales, look at trends, and have what your property is assessed at, and then what you think you can sell it for. The taxable market value gets us to where, as a residential homestead, so if you're a homeowner, there's a homestead market value exclusion that can be calculated. So depending on the valuation of your property, you can get a deduct on what's taxable. It doesn't mean that the value of your property is less. It just means what are we going to multiply that tax rate that we're going to calculate on that property could be lower. So the theory behind the homestead market value exclusion is the first $76,000, so any residential homestead up to $76,000 gets a 40% discount on their valuation. So if you have a $76,000 house, you get a $30,400 discount on the valuation, and then when we figure out how much do we need to tax each property, you're only going to be taxed on $76,000 less the $30,400. As your property grows in value over the $76,000, you get a 9% penalty. So as your valuation grows, your deduct gets less. So usually properties over just a little over $400,000 are out of calculation. So the penalty is higher than the initial $30,000. So then you're paying the full amount of the taxable market value and your value is the same. So just thinking about that for a residential homestead, so those are the only people who are eligible to get that deduct. So if you are a non-resident homestead, so you own a second property but you don't live there, you do not get the deduct. So whatever your taxable market value is, that becomes, you do not get those deducts. There are certain other credits and exclusions that could apply to any particular piece of property, and those are set out in statute. One might be a disabled veteran. So if you have a disabled veteran status, you can get a deduct on your taxable market value as well. It's an application process. There's different things you have to go through. But again, just thinking about what that means on your proposed property tax statement, that valuation matters. When you look at your net tax capacity, it also matters what type of property you have. So once we figure out that taxable market value, we find what is called a class rate, and we multiply every property by the appropriate class rate. And I did leave a link there for you if you wanted to delve in and find out what all those are. But for a residential homestead, it's a 1% class rate for the first $500,000. So in an example, if you had a $150,000 house after the market value exclusion, you would take that times 1%, and your NTC value would be $1,500. So that doesn't mean that's how much you get taxed. That just becomes a new value of the property. And a commercial industrial property, the first $150,000 is at 1.5%, and then anything over that is 2%. So it matters the type of property you have. So thinking of it in that way, the residential homestead is going to pay a lower tax rate or pay lower in taxes than a commercial industrial property because their NTC value is going to be higher. Does that make sense to everybody? So again, just thinking about that. So under the NTC world, we have property value that matters, the classification that matters, and that class rate will determine how much we're going to spread on those. In the district, we have over $7.6 billion of wealth in the district lines, and then of that, it turns into about $88.3 million of net tax capacity tax. And if you take that $88 million divided by the $7.6 billion, that gives us about a 1.16%. So think about that as that class rate. So we have a little bit more than the 1%. So that means we have shares of commercial industrial and we have shares of others that take that higher than 1%, but a lot of our property within our district lines is falling within that 1% class rate. We also have 2 cities, 4 townships, and 2 unorganized territories within our district lines. And then you can see where the percent of wealth, the percent of net tax capacity in the pie chart that you see there. So approximately 88% of our wealth was within the city limits. And then we have our townships and unorganized territories that make up the other 12%. Any questions on that? Just so you can kind of get a sense of where our wealth is within our district lines. Tax rates. So once we figure out how much we need to collect, and for our upcoming tax levy, it's just a little over $40 million for us. Of that, we have about $28 million, which is going to be net tax capacity based, and then the remaining $12 million is going to be referendum market value. So just to give you a sense of how we would figure out what that tax rate might be, is we would take that $28 million divided by our total net tax capacity as a district, which is that $88.3 million, and it gives us an initial tax rate of 0.317751. We would take everybody's net tax capacity of their individual property, multiply it by that tax rate, and that would tell us about how much we would need to collect from each taxing property to get us to our $28 million. So just as a sample in the NTC properties there, you can see that I took a $150,000 house after the market value exclusion. I took that tax rate, and that property would have to pay approximately $476. That's their share of that $28 million that we need to collect district-wide. Just so that I just want to note, too, that tax rates can be adjusted by a disparity reduction. In the county, there are certain sections, not every entity or city qualifies for a disparity aid reduction. Those are calculated by the state and then administered by the county. But if an area gets a disparity reduction, they get to lower the tax rate a little bit, so that 0.31 might go down a little bit, and then we receive state aid in exchange for that. So it isn't new money to the district, it's tax relief for that taxing area, and then we get the disparity aid as a reduction. So we get from St. Louis County the tax rate sheets. It's approximately 216 pages worth of all of the different taxing entities throughout the county. And you can see the areas in where there is disparity aid reductions and others that don't have any disparity aid. And that's basically high tax wealth versus the property wealth in that area. So if you have a high tax rate, they try to give you a little bit of a discount where that disparity aid reduction will come in. So, and we can walk through that if anyone has any questions. The sample RMV property for the district, We have about $7.8 billion in property value under RMV. Referendum market value has two main components of folks who do not have to pay on that tax, and that is seasonal rec residential properties and ag properties over the house, garage, and 1 acre. If you think about our district, we don't have a lot of either in our district lines. When you think of other districts, and I just always use this as an example, for those of you that have ever visited Grand Marais and up in Cook County, they have a little over 2/3 of their property is seasonal rec residential. So if you think about the taxing pool that they can go after for a referendum market value, 2/3 of their properties aren't paying. So their pool gets sizably smaller when they're doing a referendum market value versus a net tax capacity where everybody has to pay. In our case, we don't have a lot of seasonal rec residential or ag properties. We do have some of each actually in our district lines. But for the most part, we have a very balanced taxing pool between our referendum market value and our net tax capacity. So the difference here too is that there is no homestead market value exclusion for the homeowner. So a residential property does not get to reduce their value on a referendum market value tax. And it doesn't matter your classification. So if I have a $100,000 house and Peggy has a $100,000 business, we are going to pay the same amount in referendum market value taxes. So that would be the difference between net tax capacity and referendum market value. The things that we levy under referendum market value is our operating referendum, our local optional, our equity, and transition revenues. So those are the only things that we tax under referendum market value. Everything else, including all of our debt service, is under net tax capacity. And we'll go over that next week during Truth and Taxation. I also did the example of if you had a $150,000 residential homestead, not including with the market value exclusion, that property would pay approximately $262 for that same share of our $12 million that we need to collect for the Pay 12 levy or Pay 20 levy. Any questions on that piece? And then I just did a little levy comparison. This is a little preview of one of the slides you're going to see next week at Truth and Taxation. Again, just showing the different categories of what we're levying for. And I just wanted to note, and I'll note this again next week, the general referendum voter is going down and the general referendum other is going up. And you might say, why is that happening? We didn't do anything. And we actually didn't do anything, but the state changed the statute regarding the old $300 board-approved referendum rolled into the $424 local optional, and it is now $724 of local optional. You don't get bonus money, so for a district who didn't have the board approved, which we did not, they pulled $300 from our voter and moved it into other. So the switch there from voter to other was a statute-based change because they changed the classification of our local optional from $424 to $724, and because we didn't have that existing, they actually pulled some voter into other. So that was nothing we did, that was nothing we could choose to do, that's what the levy process happened. So it's fairly consistent from the up and the down. And if you recall last year when we went through the budget process, we also had a large negative adjustment on last year's voter because we had that $907,000 reduction. Part of that went away. We still have some reduction under voter, but not as much as we did before. So that's why we're not seeing as much of a reduction compared to the increase on the other side because of an adjustment that was happening there. Our general NTC is staying fairly consistent, and then our community service and debt service is almost identical. So we'll go through those in more detail, but I just wanted to share with you what those categories look like so that you could see that we do have a very stable levy for next year coming in, and that even though we're seeing some changes in the categories, our overall tax change is very neutral. Any questions on?
You answered the questions that I had written down in your presentation.
Awesome.
So thank you.
Thanks for the opportunity to share.
I know how much you like this stuff. So thank you. And I probably can speak on behalf of the board, look forward to the Truth and Taxation presentation. So thank you and the team for all your hard work on that. All right. We had no bids, RFPs, or quotes. Moving into policies and regulations. So we'll have our second reading next week for the fundraising policy. Any questions, comments, concerns about that? I appreciated the updates in language, so thanks for everyone who worked on that.
And we'll just comment that if anyone does have any questions or comments, to please let us know in advance if there's anything we can do to edit or provide any clarity on those. We'd be happy to do that. And then again, once this fundraising policy gets approved, if the board should move forward with that, we would then be moving forward with a crowdfunding regulation that would be complement to this. So that would be where that detail work was. When we initially talked about crowdfunding, we realized rather than creating a separate policy, it made sense to just update our fundraising first, and then we could actually put a regulation underneath that. So that will be our next step after
That'll be
this.
second. Okay.
Yep.
And they'll complement one another.
Yes.
Got it. Okay. Member Oswald.
Sorry.
Yep. I don't know if this is where this should be answered or not, but I'll be curious, I guess, when we pass this, how the policy will get out to the principals and the the activity directors and everybody who is involved with fundraising, so that it's clear. Thank you.
We actually allocate the time during our monthly principal meetings for policy updates when there's things that affect the principals that are, a board action.
Great. Thank you. Thank you again for all the time that went into updating this as well.
I see a conflict in some verbiage under Roman numeral 2 at the very end that's underlined and added as in all fundraising activities must be approved by the school board before they begin. And I think that conflicts directly with Roman numeral 3b, which says all fundraising activities must be approved in advance by the administration. So is that both? Is it, which is it? I mean, it's the same language with two different people.
Thank you for that question, and that's hopefully maybe we can provide some clarification. All of the fundraising needs to be approved by the principal to get as far as getting reported to the board that ends up in your board report. So ultimately, it gets to the board through the buildings and the building principals. So the responsibility starts at the building level with the principal saying, yes, these are the things that we want to move forward. And then it is their obligation to then report it to the board, which gets approved. So we could maybe find some language. I think it's doing what it's supposed to be doing, but I understand where you're coming from as far as the language. But it is actually both processes need to happen in our policy.
So maybe perhaps in the already added underlined item, maybe we could look at changing it to must be given to your administrator to be forwarded to the school board for approval before they begin?
Sure.
Something that simple.
Absolutely. Yep.
Okay.
Great. So if we approve on Tuesday, policy 511, we'll be deleting 1050. We also have a revision to bylaw, which again will be in the second reading, to move to a consent agenda process. Are there any questions or discussion around that? My only question is, should this pass, would we plan to do education in January around how we can most effectively and appropriately utilize a consent agenda and what that looks like with some different scenarios so that we're all clear from a Robert's Rule standpoint, but then also as we provide information to folks for agenda setting, and then just kind of so that we don't fall on our faces in January if we approve this.
Absolutely, and I think that while I think there would be some board members that would be enthusiastically supportive of moving right to January to provide the consent agenda, we could certainly work towards pre-meeting education so that we could provide the board. Similarly to the fundraising, what we would like to do after, should the board approve the change in the bylaw to include the consent agenda, we'd like to include a regulation of all the items that could be included on the consent agenda. We gave that sample at our last month's meeting that showed the components of what would be on there, and I think that would just be helpful when we do agenda setting so that those would be automatic things that could be on there. But Oftentimes what the policy or the procedure might be during the meeting is that they sit on the consent agenda, but any board member could pull any item off of the consent agenda for individual discussion. So we could set up those criteria such as the approval of versions of policy changes, the minutes to be approved. Often all of the things in our regular meeting agendas, the approval of RFPs, quotes, and those type of things could all run through the consent. But again, part of the process of the education would be running through the board reports that would happen before the consent agenda is how we have it structured. But again, I think our hope was maybe we could try the consent agenda in January, but certainly if we didn't feel ready or the board didn't feel comfortable and the board chair, obviously would direct how that would work, but we could have that sample ready to go and then have some pre-education through board correspondence or through the weekly updates.
Great, thank you. Member Laflerkin?
I was going to add that draft consent agenda she talked about that was handed out last time, that might be good to just bring up again, being we're talking about it again, just so, because it was well put together and we did have some discussion on it last month, but yeah, thank you.
Great. Alrighty, moving on to contracts, change orders, and leases. The first under contracts, are we still waiting documents? And sorry, I shouldn't have phrased it that way. I haven't seen any updated documents, so we're still waiting.
So as an update, we've been working with the folks at Essentia. We actually had a call this afternoon, just a few minutes before the meeting. We have been working very well to try to clarify some language. We had some questions from some board members and just trying to find wording that makes sense to both the school board and to Essentia. I don't think there's anything materially different that you're going to see other than we're just trying to clarify some wording and making sure everybody understands the intent and purpose. And the folks that I visited with this afternoon, just because of the timing of when I needed to walk in here versus the timing they needed to just change literally just a couple words in a couple sentences. They plan to have that tomorrow, and then we're going to review it here at the district and then send that out to you so that you'll have some days to review. So we do plan on having that as a placeholder still for Tuesday, so if anyone has any questions between now and then I'll certainly send along any supplemental information between then and Tuesday if anyone has any questions. But our intention is to have that for the board meeting on Tuesday.
Okay, great. Thank you for that. And I know that this has been a long process and a lot of work. While I know you enjoy this work, Kathy, I know it still gets to be grinding. So thanks to you and your team for that. Moving on to change orders. Looking at this change order number 1, and I got confused by this, so my notes are a little bit all over the place. Are we directing our questions to you on this, Mr. Spooner? Lucky
Sure.
you in the hot seat. So my first is on the track at PSS. Why are we paying more?
As you're aware from previous meetings, I've rejected the work due to ponding in lane 1, and we have not made final payment. This change order is for our design professional to remain on board. It's an estimated 52 hours. I don't think it will take that much. But it's for them to oversee remediation efforts by the Northland and the subcontractor. And they represent us, and they'll evaluate the work being done, ensure nothing is being done incorrectly, and evaluate and recommend if we should accept the remediation effort that's done next summer.
Okay, that's very helpful. Thank you. My other question is around the federal COPS grant. And so my question is around the change in the contract sum. So why is there a change? And then how may that change impact other work that is outlined in the grant application?
The change in the COPS grant is related to the secondary sites. And when we bid this project out, we had 2 A phones, and the A phones are the communication devices, and they control the doors, video voice monitoring. The secondary sites determined that they needed a third A phone in the nurse's office, which we did not have in the bid. So this is adding the third A phone. We do have adequate funding to accomplish this work. And initially, when I brought this to the board, we were approximately $95,000 under budget. So I still expect, even with potentially, if there's another change order, we're still going to be transferring $75,000 to $90,000 into the camera budget. So we'll be buying more cameras than we had originally anticipated.
Okay, that's really helpful. Can you remind us what the A phones are for? It's been a while since we looked at that grant.
If it's a year from now, we're using everything is functioning. If you walk into Congdon Park Elementary, you're going to be in the vestibule, and you're going to push a button, and you're going to communicate voice and video with the clerical staff. And the A phone is like my laptop, only smaller. There'll be a picture of the person that the clerical is talking to, and there'll be a button that they can push and control doors. So they're going to use that to control the door to let you into the office, and you're going to say, I'm here to visit my child's teacher. And the person would sign in, and then they would use that A phone module to release the inner door from the office to the corridor. So it's video and voice communication as well as controlling doors.
Great. Okay. And this is tangential but related. With the implementation of those A phones and more video capacity, et cetera, do we need to change our any of our insurance caps or any of the resources that we have going into protecting our internet infrastructure, or so nobody could hack into those systems? I'm struggling with the words right now, and I shouldn't because I work for an IT organization. But something that would prevent, something to firewalls or to protect.
We're not changing what we have. We're adding to what we have.
Right.
We're upgrading. That's a good question. I can look into it. I mean, we do have adequate insurance related to terrorism and other items, but I can look into this.
I'm wondering if some cyber liability and some additional like firewall protections might be best practice. I don't know. I'm just curious.
It's a good question. I can look into that.
Thank you.
And I can email the board.
Great. Thank you. I hope my board doesn't watch these videos. I'd be embarrassed. Okay. Anything else under contracts, change orders, and leases? Okay. Moving on to resolutions, the acceptance of donations. Again, a very robust month for donations. Member Oswald?
I'm just curious why the second line of the donation of mittens and quilts and hats is under curriculum. Like, why was curriculum assigned to distribute that, or
As opposed to, you're saying the 4 schools that are listed?
correct? Why is it a curriculum thing?
I can't answer that question, but we'll ask Jackie, and if we need to change that, we will.
Okay.
We also have a resolution around the certified tax levy. Thank you for reminding us, CFO Erickson, that has not changed since we initially approved the draft in September. And then we have a number of informational. Are there any questions, comments, concerns around the expenditure contracts? How about the no-cost contracts?
Question.
Member Oswald?
I have a question about the in-request canines. That's just for East. Will Denfeld be having a similar contract at some point?
As of right now, I can't answer that question. I know that there is a student activity fund that's paying the one through East, so that is being done. Oh, maybe Assistant Superintendent Horton can.
What's that look like?
I was just returning the smile that you were offering to me. The canine, 2 2 years ago, actually, there was discussion prior to me starting about shifting that to the site level as a site level piece. And last year, we communicated with our principals that that would be indeed moving. So this year, it's a site level. It's a site level cost, not a district level cost. So East is saying that they're going to be allocating the funding source identified to be doing that. If Denfeld's choosing to do that, that'll be a Denfeld decision.
And my follow-up question is wasn't it normally $5,000 or wasn't it more than $1,500 normally? And so how many searches does $1,500 buy us?
There's a copy of the contract. I'll have to look at it specifically to say, but I want to say it was up to 4. If I looked, based on the number of times they came. So
okay.
We'll take a look at that for the detail.
And that's training staff. I mean, the dog's are already trained. Yeah, it's training staff. Okay. Well, you never know. Maybe there's some new pups on the force.
You never know.
And we would be happy to help break them in or train them in our educational facilities. Let's see. Any questions around revenue? Questions, comments, concerns around revenue contracts? Member Leffler-Kemp.
I still had some questions on the expenditure. Okay, I just had a question towards the end where it's NAACP, create and provide teaching points and curriculum. Is that with our curriculum office or what? Or
This one is through the Office of Education Equity, so this is through our achievement and integration.
Oh, okay. And then the next one, where it's the Equity Alliance of Minnesota Professional Development for Ordine and East. Is that for all staff for Staff Development Day, or?
This was the October 28th Staff Development
That's
Day.
what I wondered. Okay, thank you.
Okay. Any questions on the no-cost contracts? Revenue contracts? Okay. Property sale updates. I just appreciate a little bit more detail from Greg this month on his report. So if he's not watching, if you would pass along that feedback to him. And my question was around the website advertising. Typically, he lists in his report where the properties are listed, so on which sites we can find the information. So this is new, this website advertising. So he has specific ads on these. I did not go online to do my due diligence around this. So he has ads specific to our properties on these websites, or are the ads specific to Fulmer commercial real estate? Do we know? And then how long will they be up?
I believe some of these have been ongoing since he started. It was part of our agreement. Mm-hmm. I believe the LoopNet is kind of like the MLS of commercial. So like MLS is multiple listing service that's used for residential, and this is the commercial national site. And I know that it's been on his website, but we could ask for specifics on that, but I believe it's been ongoing.
Okay, I'd be curious what kind of traffic he gets from the stat, because if you're paying for advertising on sites, they'll send you statistics on click-throughs, and I'd be curious to take a look at that if he would make that information available to us too. Okay, moving on to our facilities management and capital project report. Before you begin, Mr. Spooner, a sincere and genuine thank you on behalf of all of us and all of our colleagues and those of us across the community for all the work that you and your team have done in this last week and a half, as we've had our 9th largest snowfall in Duluth history. So please extend our gratitude to your teams. And with that, I'll turn it over to you.
Yeah, definitely. I'll start out by saying November started out as a normal November, and it ended with quite the snowstorm that hasn't quit even till now. So I I also need to send a big thank you out to all the maintenance and operations staff for all the work that they have continually done. And we were ready to go ahead of the city, so our guys and gals did just an awesome job of cleaning snow, and it snowed again last night, and they cleaned it up for today. So beyond the snowstorm, which has been the primary focus, the report focuses on November. There isn't a lot new in the report. We are still working with the city of Duluth to update our joint power use and lease agreements. I think you're aware gender neutral signage at both high schools is up at this point, and we're meeting at the middle schools, or meeting with middle school staff next week and I think the week after for both of those to discuss and establish locations. We have some terrazzo being repaired at Denfeld over the holiday break. COPS grant for 12 sites is proceeding as planned, and I anticipate work to be completed by early January. We've got 2 bids going out for next summer's work, Rock Ridge Roof and Congdon Park tuck pointing. We've done well in our operations area. We're actually fully staffed. We don't have any vacancies right now, which is unusual. It's great, but it doesn't happen real often. Health and safety, we had a fire marshal walk through at Piedmont. We had 30 first report of incidents, and we had 7 OSHA recordable incidents. And the Labor Management Safety Committee meeting is reviewing current injury trends, and they are brainstorming to figure out how we can better provide training to help resolve what is occurring right now. With that, I'll open it up to any questions anybody might have.
I have a few questions. So after you have your plans in place for the middle schools around the gender neutral signage, do you plan to do that at the elementary school level?
I believe so. I'd have to turn that over to Jeff to get the answer on that.
Our original plan was phased in a little bit over a longer period of time, so we didn't really take into consideration what that would look like at the elementary school. So we do have a plan for the secondaries, and we've moved fast with that. So I think we'll have to revisit that conversation. We haven't made any plans one way or the other at the elementary school.
Okay.
Yeah.
Oh, go ahead. Yeah.
I just wanted to say that we do make accommodations at all of the schools currently, including the elementary schools. It's a little bit easier to identify gender-neutral washrooms at the secondary level because there are more of them.
Sure.
It's a little trickier at our elementaries because there might be one staff bathroom in a building, depending on which building it is. But it is something that we make accommodations for, regardless of where it is.
Sure. Great, thank you. My next question is around the tuck point project at Congdon. I thought we bid that. I thought we already approved a bid for that. Or was that a 2-phase project?
We haven't approved a bid for that.
Okay, I'm thinking about something else.
Being bid right now, and that's for the lower 2/3 of the building, and then windows will be the following year. But you may be thinking about when I presented the LTFM plan, we talked about it.
Oh, that's probably what no, actually, that might have been it, but it was another project that we had already approved. I'll go back and look at my notes. My last question is around the 2019 year-to-date incidents. How do these numbers compare to, do we do like a 3-year average or a 3-year comparison to how did the 2019 numbers compare to the last couple of years?
I don't have that information, but I can get it.
That'd be great.
I'll put that into the same email and forward that out.
Okay, thank you. I just remember that I think our workman's comp insurance went up last year, and so it helps for us to have a little bit of context.
I think Jason Barsness, who is our health and safety coordinator, this is actually November's report, even though it's December. In December's report, he'll put the summary and the comparison.
Okay, I can wait till December then.
Okay.
Member Laflerkin?
Yeah, I was actually going to ask that same question in terms of year-to-date and comparison, but if it's going to be in the December report, that'll be good. And then this is just a general comment about the gender-neutral bathrooms. We did discuss it also yesterday in the Education Committee, and so when you get a chance to listen to that, you'll hear some discussion around and support for the work that's being done around the bathrooms. So, just for information purposes. Thank you.
Great. All right. Moving on, we have our draft.
Madam Chair.
Oh, go ahead. I'm sorry, I wasn't sure if it was still on. Go ahead.
Yeah, it was. Sorry. I just wanted to say with the report of incidents that it's always good to remind people to walk like a penguin, especially this time of year, and given the snowfall that we've had and the ice. I also wanted to give a shout out to our maintenance and facilities crews. I know that many of them were in cleaning things up even before the city was there. I know Jason Ledoux sitting back there. I know I believe I heard that he crawled to Stowe and shoveled a path out, and so I appreciate all of the work that went into cleaning up. When I stepped out just a moment ago, it's because Steve Johnson called me, and I have a bit of a response when he calls now, like, no, not again. But we are expecting some really cold weather. I sent out a message today reminding folks to please make sure that kids are dressed warmly as they're going out, hats, mittens, scarves, and if you don't have the winter gear that you need, please talk to their school. We have lots of people with resources for families if they don't have appropriate gear for winter, and we want to make sure that all of our kids are warm and safe. And he also said that we're expecting more snow on Thursday, and then more snow on Friday, and then more snow on Saturday. So it sounds like this winter is going to be a challenge.
Our child loved the days off, but when I reminded him that meant that he may have to go late in the summer, it became less. His rose-colored glasses came off.
Yes, maybe longer days or additional days or a combination thereof. Yep. We'll have those conversations soon.
Yes. He thought I was pretty cool up until I reminded him of that point. Yeah. Great. And thanks to those in the back, since you're here. A big thank you for all of your hard work. And you guys stay warm, too. Okay. Legislative platform for 2020. Are you going to walk through that, or do you, Kathy? Okay. Sure. All right. Take team.
We provided just a draft of components that in what would be the form that you see in the past, which is the bifold with photos in color. This would be the content portion as a first draft to review. And first section is the continuation of our special education funding. As you all know, and for all of the efforts that were put by so many last year at the legislative session, we were this close, and due to circumstances outside of the district's control and how the state ended up going into special session and really stripping away almost everything within those initial omnibus bills to just kind of be real streamlined. Our language, along with many others, were removed, so we again are just reinforcing that we have a story to tell. I think that it's been heard. I think there are folks that would like to help us resolve that. So again, we continue to ask for a permanent increase to our base. As our base was artificially low in fiscal year 16, we're asking for a one-time payment. We have edited that to be a little bit higher than it was last year because we have one more year of being over the cap before the law changes. So we just amended that estimate to, in fact, we have 5 years now of not being funded correctly. We also, as part of our discussions last year and the testimony that the superintendent gave in multiple hearings, but specifically I'm remembering the Senate hearing talking about just some equity in tuition billing rates for charter schools to the resident districts. There's just a process that allows for a lot of variation, and so in order for resident districts to feel that they're on an even playing field with other districts as far as tuition billing, we'd be asking for some language changes in policy for tuition billing. And then we just added an additional cross-subsidy aid payment for tuition for districts who are over the cap in fiscal year 16 to 20, which would be us and very few others, because there were many districts who were over the cap in the first year and then went under the cap and went over the cap. We have been over the cap all 4 years of the new funding process. So what we'd be asking for, I guess, is just an additional bump to say, you know, we had to invest more of our general fund money than the average, so we would just be asking for consideration for that. The increase in the basic formula allowance, as you know, the legislature was generous to give us a 2% this current year and 2% in the next biennium, or in the next year of the biennium, but we are asking the legislature to consider editing that to 3%. I believe all of the state organizations are asking for 3%, and then also asking for an additional annual cost of living increase to be built into the formula so that we're not always going back to ask that there's an inflator that is always included in that basic formula allowance. So, and again, for us, I think the story that we're telling is many of our foundational expenditures, which are facilities, technology, transportation, come out of that basic allowance. We don't have dedicated streamlined funds for that. And so when we're trying to maintain all of our costs and programs for students, the things that often get reduced first are those foundational costs. So as we're thinking about all those areas of need, and a supplement to the basic formula allowance helps everything, because every eligible expenditure can utilize those basic allowance funding dollars. To expand the eligible use for long-term facilities maintenance revenue, this is a new one for this year. Several of the state organizations, including the School Board Association, I believe, MREA, MASBO, are asking for more eligible uses for long-term facilities maintenance revenue. It is fairly restrictive on what you can use those dollars for. So what we're asking for is more flexibility so that we can utilize those dollars in a good way. An example that we actually talked about in a meeting earlier today is, if you think about the process for long-term facilities maintenance, is a like for like, is how they kind of describe it. So you're able to, if you have something that's deficient, you're able to improve it to the original condition, but you're not supposed to make it better. Well, in many cases, better can be cheaper, and better can be more efficient, and better can actually be better for students. And so it just seems logical that when there's energy efficiency or other items that make it more sense, that those things should get approved. That like for like doesn't always make sense. So we're asking for that consideration. We're asking for more flexibility, that some LTFM could be used for safety and security. We do have access to what we call Safe Schools levy, which is where we can use that for safety and security, but it is only $36 a pupil unit is what we receive as a district. And as you know, if we hadn't received the COPS grant, we wouldn't be able to be doing the dollars and the improvements that we're doing there. That also required a local match, so we are utilizing district funds to help make that project move forward. So if we could use long-term facilities revenue for those pieces. Again, we just put some other items in, remodeling costs for career and technical programming. The state has indicated that that is an area of interest for the state, and that if we could use LTFM dollars to help retrofit classrooms that could make those programs work better. They are some of the most expensive programming a district can have, so oftentimes we're not able to do those things with general fund dollars because we just don't have the resources. Demolition or replacement for facilities on contaminated property. This would just help for if you have areas in your district that might have areas where you need to do reductions. And then just for technology infrastructure, and that'd be the backbone pieces, again, where there isn't any necessarily dedicated funding, but they're critical needs in our buildings. So again, we're just saying that these would be some of the things that I think would help support our district.
So when you're talking about technology infrastructure, we're talking about what needs to happen in the buildings. We're not talking about purchasing computers.
Correct. This would just be relation to long-term facilities maintenance. Yep, absolutely. Okay. But that is often in conflict with trying to do buying things that we have to make sure our backbone is good as well.
For sure. Great. Thank you.
The next three were items that we had on our last year's agenda as well for legislative support. The early-based learning for early education, again, we do support fully funding the expansion of school-based early education programs. I know it is continuing to be a high priority of our governor, and I think of many of our education committee members at the legislature. There is a surplus. We hear that there's a state surplus. And again, this is an area where to put in a dedicated ongoing allocation or entitlement program is very expensive. And when you do one-off, the voluntary pre-kindergarten or VPK program is helpful, but it is not fully funding early childhood. It's not early. It's a challenge for us. And so where I know it will be difficult for the state to fully fund early learning for every district in the state, moving our way towards finding that way to allow districts to continue to do that, I think, is critical. Mental health professionals, you've heard it probably in many committee meetings, not just here, but in education and throughout the community, throughout the country, that mental health professionals are a critical piece for education. We do, as a district, we are part of receiving some school-linked mental health services through a grant that the Human Development Center gets, so some of our elementary buildings are supported by that, and there's over $33 million of grant being spread throughout the state, but that ends at the end of next year. It was a 3-year grant cycle, so again, we're just saying these are critical, they're helping, but they're certainly not fully supporting mental health, so we'd love to see an increase either in the state grants or, again, trying to find other resources where we can put mental health professionals supporting in our buildings. And then, again, the increase of support for the full-service community school model. I think it, again, has support at the legislature, but trying to find that balance of where they can find resources. We hear it from legislators who see the value, and as one of the pioneers of providing the full service community school model in the state, we're challenged because there's so much more we could do if we had funding. But again, we don't have a dedicated funding stream. We have many needs and challenges in the district. So if the state were to, again, focus on this and provide that dedicated stream of funding, I think we could, again, continue to prove that the model could work if there's proper funding to go along with it. And I'll turn it over to the superintendent for other comments.
I think you covered it all really well.
A very thorough, great take, Gene. There's a joke in there, but I'm going to hold it because it's not appropriate for a TV. Of the asks or that are in the legislative platform, I know that there are a number that overlap with what we did last year, which is helpful for us for consistency of message. Are there pieces in here? I know you mentioned, we talked about the special ed and being over the cap for these number of years. Are there pieces in here that are unique to ISD 709 that we should be thoughtful in how we approach legislators about, because they won't necessarily be hearing it from their peers in the House or the Senate?
Absolutely. I think the special education piece is our story. It will be the one that I think will hopefully be able to provide you as board members and our staff and those who visit the Capitol, because I know we had literally dozens and dozens of people who represent our district down at the Capitol during the session, that we can provide that extra supplemental explanations. Last year we kind of had a one-page handout besides this that specifically talked about special education, and I know several board members who came down during Capitol Days were able to share that story, and we can continue to do that. The special education funding law is changing starting in fiscal year 21, but that does not solve our problem that happened back in 2016. So some people might think, oh, well, the law is changing, there's no more ceiling, you shouldn't have to worry. We do, because we've been filling this gap of over $4 million that really, had we had a correct funding formula back in 2016, that money would be in our system right now versus not being a part of the district. So I do think this is a message that we want to continue to send. I think between now and February, we'll continue to think about what is important to the district, and should there be other messages or other things we need to share, we can do that. We'll find out too what the other organizations, statewide organizations are doing, we can support them. And I believe one of the really nice things we had last year was they were supporting us and sharing that story. Special education is a universal need throughout the state. Our story, though, is very unique to Duluth, so I hope we can continue to share that message.
Great, thank you. Member Lafferkamp.
Yeah, I just wanted to, a couple comments. One is, again, thank you for putting together a really well-thought-out platform. And just as someone who's used platforms a lot, it is real helpful on how you lay it out in a way that gets at the high points but gives us flexibility when we're lobbying. So thank you for that. I also appreciated you mentioned that the School Board Association at the delegate assembly that we just had this weekend, and we missed you, Alana. Jill and I were two of the delegates from this region with about 120 people, and so there were a couple of these items that are on ours that did get voted on by the 120 folks. So we'll be hearing more about that, and particularly at the conference in January, we'll get more of our pretty platform from this weekend's work that we did. So just wanted to comment on that. I think the couple items that you mentioned that were kind of new to our platform, kind of any more kind of bullet point that we can have to help educate ourselves, and that'll be helpful. And then the last thing I just wanted to add is, let's see about the platform. The mental health professionals heard a lot from the other schools as I was talking to other school board members this weekend about their districts really going to be highlighting and lobbying on that as part of their platform. So again, I'm glad we have it on there, but that, as Kathy said, is very consistent across the state. And then the last kind of funny thing about the full service community schools is I was talking to a school board colleague from Moorhead, and because they attended the School Board Association workshop that we did on full service community schools, they are really working up there and kind of using our model. So I want to see ours expanded, but I think as you highlighted, we are a pretty model program for other districts to look at. So let's keep doing the great work we're doing there. So thank you.
And I think as somebody who works with mental health practitioners, this is an ask that's coming from everybody and anybody. So I think the more we can highlight the collaborations that we have within the community with organizations like HGC, like Spirit Community Health Center, some of the other partner organizations that we have, the easier it is, I think, for the legislators to make the overlapping understanding of the ask. We certainly struggle with reimbursement levels for mental health providers if we can even find them. So I think to talk about maybe ways that the district could play into the pipeline program for mental health practitioners could be really interesting. That's a little bit down the road, but I think figuring out ways to articulate how we could leverage dollars and from a community partnership standpoint will be really beneficial because so many different lobbying bodies are going to be asking for this. So thank you for putting this together in such a concise manner yet again. And we'll get the final platform in January. Okay, great. Wonderful. So for future items, in January we have our organizational meeting where we will welcome new board members, and we'll have the task of setting up new committee structures, and then we'll do policy updates. With that, we will close the business committee meeting for December 10th, and see you next week. Thank you.
Just kept going farther and farther.
Can you go back farther?